We are joined this morning in Washington, D.C. by Tim Adams, who's the managing director at the Lindsey Group. And Tim previously served as Treasury undersecretary for international affairs during the Bush administration. In fact, I would say that he was the top currency policy official at the Treasury under George W. Bush. And he also was the chief of staff at the Treasury at one point as well. Tim, thank you for joining us today. I guess let's move on to the yuan debate. The New York Times has a move imminent at this point, but when do you think we'll actually get the reins to be loosened?
Well, good morning, Susan, and thank you for having me. You know, I suspect the Chinese move fairly soon. You noted in your lead into the story that there are a number of key events coming up. The G20 finance ministers meeting, the strategic and economic dialogue in May, the G20 summit in June. All of these are key events, and I don't think the Chinese want to go into those key forums talking about the exchange rate. I think they'd probably like to remove that from the agenda item.
Yeah, and you're not ruling out a one-off appreciation, are you, Tim?
Well, it's possible. You know, there are arguments, and you noted one of the arguments on behalf of a one-off to try to deal with some of the hot money flows. But I suspect whether it's one-off or whether it's just loosening the bands, whatever it is, it will probably be gradual and cautious. I think there's still some concern about external demand and possible double dips in Europe and the U.S. So I don't expect revolutionary change, but probably evolutionary change.
Okay, so let me just ask you then about the Chinese trade deficit, because it's speculated that March will see a Chinese trade deficit, meaning the imports surpass exports for the first time in a long time, 6 years or so. Doesn't that go against the argument of a necessity to appreciate the yuan?
Right. Well, you have to look at the numbers, too. They're year-over-year numbers, and obviously trade was plummeting last year in the wake of the global crisis. But the key is not to look at 1 month's set of statistics. The key is to look at broader trends, and obviously the trends are such that Chinese exports are surging. And I suspect that in 3 or 4 months from now, we probably see a different set of data. But obviously for 1 month, they may indeed report a trade deficit.
Okay, so let me just ask you, Tim, I mean, for the year 2010, we're looking at yuan forwards now pricing in maybe a 3.5% appreciation. How do you see the yuan for 2010? Maybe it'll get to 5%, as Goldman Sachs is predicting.
I think 5% sounds like a pretty reasonable adjustment. And that will certainly be enough, I think, to buy them some political goodwill. And if they can do a little bit more on the front end, that will buy even more goodwill, especially for some of those key events that you noted.
And what about the undervaluation of the yuan? I mean, there's so many figures that's been coming out of Washington and U.S. lawmakers, lobby groups, et cetera. It seems a consensus, maybe 25% to 40% undervaluation for the RMB. But some manufacturing lobby group says 50%. But since you're the expert, Tim, what do you think? How much do you think the RMB needs to appreciate?
Well, there's no real consensus there. You can torture the numbers and build models to produce whatever outcome you want. I think the general consensus out of the IMF, which I think is probably the most objective, neutral observer, is that there is modest undervaluation, that the currency does need to appreciate, and it's actually in China's interest to do so. We are seeing inflationary pressures in China, a torrid pace of economic growth. And it just doesn't make sense for the Chinese to continue to import our monetary policy. It's inconsistent with their own economic objectives. Yeah,
but you hear the rhetoric being ratcheting up from U.S. lawmakers, again, from Schumer and Lindsey, the senators that are always leading the charge for trying to do something about its yuan policy. But since you worked at the Treasury, Tim, let me just ask you in terms of how Tim Geithner and that department has handled this currency debate. I mean, quiet diplomacy, as you said, pushing back this biannual foreign exchange report, and then quietly going to Beijing saying maybe you should do something to help appease us, help us, I guess, lobby for you in the U.S.
Oh, absolutely. I try to think of the Treasury Department as the sober voice of reason in Washington. And I think Tim Geithner is playing that role appropriately, and that is engage the Chinese bilaterally, multilaterally, but do so in a very quiet diplomatic fashion and try to counter some of the heated rhetoric that's occurring in Washington, driven by very high unemployment levels and economic growth, which is lackluster, to say the best.
Yeah, and even if the yuan does appreciate, I mean, Tim, some noted economists, such as ones from Oxford, have said that really, if you've seen the appreciation in the RMB since 2005 to 2008 when stalled, the trade surplus for China didn't really move that much. I mean, you didn't see many more U.S. exports going to the country. So really, what is the benefit of appreciation?
Well, there are enormous benefits for China specifically because of what I noted earlier, inflationary pressures, the need to have a more independent monetary authority and break the link with U.S. monetary policy. But I think it in and of itself is not sufficient to change the dynamic, but it is an important ingredient. Economists like to talk about necessary but not sufficient conditions. And the exchange rate appreciation is necessary, but by itself isn't enough. There's so many other factors that influence the bilateral relationship.
Yeah, I bet there is. Now, Tim, before you go, we have about a minute here, but let me just ask you about China as a whole. You just got back from visiting the mainland. What do you think of hedge fund managers such as Jim Chano saying that China is on the verge of collapse and the bubble is about to burst?
Oh, I don't believe it. Obviously, asset prices are very frothy, and the pace of growth is quite rapid. And officials are going to have to throttle back growth to something more sustainable in the 9 or 10% range. And I suspect that real estate prices will have to correct some this year. But, you know, I've heard this line for 15 years now that China is on the precipice of a cataclysmic event. And it might happen at some point in 10 or 15 years from now, but I don't think it's a near-term risk.
Okay, Tim, thank you for sharing your time with us. Yes, and doesn't it? And we love those headlines. Tim, thank you for that. Tim Adams of the Lindsey Group. He was the Treasury's top person on currency policy with China under the George W. Bush administration.